Shri Sunil Krishnani of STPM is requested to escort our speaker CA S Venkataramani to the dais. Introducing the session chairman, Shri Vikram Nankani. He is a senior advocate and a qualified lawyer at the bar since 1986. Joined the chamber of Mr. Ashok Desai, a senior advocate, former Attorney General of India between 1986 and 2003. Appeared as counsel in variety of matters concerning commercial disputes, corporate matters, economic offences and criminal cases, tax shipping and arbitration. He is a fellow of Chartered Institute of Arbitrators, London. He is acknowledged by Legal 500 as a leading individual practitioner in dispute resolution and litigation in India. He is also invited as an expert lawyer internationally. Please help me welcome our session chairman, Shri Vikram Nankani. It is indeed a great pleasure and pride in introducing the speaker of this session, CA S Venkataramani. A partner in Messrs. Sangvi Devanuni, a CA firm in Bangalore. A science graduate, he qualified as a chartered accountant in the year 1988. Mainly involved in indirect tax planning and representation at various levels. A very good speaker and has presented a number of papers on indirect taxes at the state and national level. He has co-authored 3 books. Presently, he is the Joint Secretary of AIFTP South Zone, Chairman of the State Taxation Committee, Bangalore, Chamber of Industry and Commerce, a member of the Fiscal Policy Institute of Government of Karnataka, involved in structuring and designing the course curriculum of the Officers of Commercial Tax Department, a regular faculty at the Bangalore branch of SIRC of ICI. Please help me welcome Shri S. Venkataramani. At this juncture, I invite our chairman for his introductory remarks.
Thank you. At the outset, heartiest congratulations to Vijay and his team for bringing something like this for the first time in the sister city of Thane. It's always grown into the shadows of Mumbai. So nice to see this gathering here. And I think I also must congratulate the organizers for the other wise decision that you have made to have the right speaker just after lunch. You don't need a wake-up call. And that's my colleague on the right, Venkataramani. Absolute stunner. I have seen his presentation and I have not thought that there's anything that he has left unanswered. On the subject itself, the topic again has been very carefully crafted. It's intricate issues on valuation. It's not just valuation, but intricate issues on valuation. And that's important because what may seemingly seem to be a simple subject of valuation, in the context of GST, it is really a khichdi or a bhelpuri, depending on what you will want to have this evening. The language of the statute as it stands today is a hodgepodge. Prior to GST, we had every taxation statute has got a valuation provision that's integral to it because almost all taxes are ad valorem, and therefore, apart from the rate, and of course classification today has a very limited role, valuation assumes paramount importance because whatever the play in joints is now left to see how you can structure your transaction in the most cost-effective manner. And there lies the secret between a successful transaction and a not so successful transaction. In most testing times today that we see where the corporates really are so very concerned not only of the bottom line, but not only of the top line, but the bottom line. So this is really a process more of unlearning than learning, because what we see today is a concept which has been borrowed primarily from the Customs Act, and Customs is outside the net of GST. You have a definition of related parties which has again been bodily lifted from the Customs valuation rules. You had a change over in the excise in 2000 when from the wholesale factory price they moved on to the transaction value. a concept which has been retained now in the GST. You had a paradigm shift as far as service tax is concerned, because they spoke about gross consideration under section 67, and you do not find those words apparently in section 15 of the GST. And now the transaction value concept has been extended to services to make it all the more complex. These are some of the grappling issues that we find, and of course not to forget that there are some shades of the VAT definition of a sale price and some which have been left out. So to my mind, it's not just the process of learning the new law, but also unlearning the old law. And only when you strike that right balance between unlearning and learning will you really understand, quote unquote, the intricate questions of valuation which Venkataramani is going to soon unravel before you. Thank you.
Thank you, sir. Sir, the floor is yours.
Good afternoon. My chairman for today, office bearers. My chairman for today, office bearers, senior practitioners, some of my colleagues in profession, chartered accountants, some youngsters. My chairman summed it up in 2 minutes. I wish this entire GST was so easy. I have tried in this paper because my subject is other than real estate. So I have consciously kept away real estate. I could make a passing reference here and there, but that may not be an opinion or a thought. So we should concentrate on transactions other than real estate transactions, and that is my topic. I will also request my chairman to stop me. So please stop me whenever I have to stop, because I know the timelines. I am aware of that. So I was just wondering, how should I start this entire topic called valuation? I have a chairman here who is extremely experienced on matters relating to valuation. I have all the while in my career spanning 35 years dealt with laws relating to goods which has no valuation provisions. We have no valuation provisions. So as he said, I had to learn rather than unlearn what valuation really means. And as I started reading as a beginner the provisions relating to valuation, what transaction value is, what consideration is, what non-monetary is, because the law seeks to use all these words differently in different places, in different sections and rules. Somewhere in the rule he says non-monetary transaction. Somewhere in the section he says consideration. Somewhere he says no consideration. Somewhere he says quid pro quo. So we need to figure out what all these means, and we need to understand this. The best way to understand valuation provisions, I have always thought, is through examples. Best way. So in this paper, I have tried to take as many examples as possible. Some of it simple, some of it complex, some of it relating to services, and some of it relating to composite supplies. I won't be able to take you through the nuances of composite supplies and mixed supplies and how valuation is going to hit you, but I will take you through some of the simple examples which we think is going to be the simplest provision. I think is going to be some of the hard-fought litigations we are going to have over the next 10 to 15 years. Some of the largest litigations you will see will be on classification and valuation. Now look at this, look at this paradox. We have officers of the state who don't know services, they don't know service. We have service tax officers who don't know goods. And we have excise officers who all the while levy tax only up to one particular point and he is not travelled beyond that. Now we have to balance all these three and get them to our understanding to figure out what this entire concept of valuation means. It's going to be a nightmare. It's going to be a nightmare, and that part is sure. That part is sure. So let's get to the first slide. We need to know what is consideration. I have picked up this quid pro quo, this maxim, which appears in the flyers issued by the council, by CVEC or by whoever. Quid pro quo. What is quid pro quo? Quid pro quo, as I understand, is one for the other. That means what the recipient pays to the seller is quid pro quo. This is simple understanding. What if the recipient does not pay? He does not pay. Is there no quid pro quo? The answer is yes. The answer is yes. Common man will understand that there is no quid pro quo. But in real life business, when we talk about, there is a quid pro quo in some form or the other. In some form or the other. You are required to delve deep into it. Because tomorrow if you are take your case on valuation and go to my chairman, the first question that he will ask you is, what did you get in return for the supply? नहीं sir, कुछ नहीं दिया sir, मेरा land पे उसका factory पड़ा है, बस, that's all. Is that not quid pro quo? The answer is yes. Then he will tell you what is valuation, what is rental in Worli Sea phase, what is the rent that you have to pay, what is open market value, how is the supply coming from A to B. Then he says, you have no case, the officer has charged you lesser tax, be happy and go. Be happy and go. This is how it is going to be. And so we will have to be absolutely careful what the recipient pays the supplier in cash or in kind. It is not so easy. We will move on to the next concept, what is kind, next slide, in the next slide. Consideration under controlled conditions. Now what is consideration under controlled conditions? Consideration when it is applied free. When Nikita madam goes to a shop and buys a handbag, there is no controlled conditions there. But if Nikita madam goes to a shop and says, I want only white, I want only Louis Vuitton, I want only a bag which is 1 foot by 6 inches, I want a bag which probably is a cabin baggage, but I can pay only 50,000 rupees, but this 50,000 is being sold at 40,000 somewhere else. Then she's controlling the transaction. She's controlling that transaction. Now these conditions can be applied by the supplier or by the recipient in real life situations. In real life situations. I know my chairman has to leave in a hurry, but I want his comments on this issue, and therefore I want to tell him this. I am taking this, I am sticking my neck out and saying the transaction between a principal and a job worker is one which takes place in controlled conditions. In controlled conditions. The principal controls the job worker. Therefore, I want to treat the principal and job worker as a related person, and here are my arguments for it. The principal controls the price. The principal controls the production. The principal controls the place of manufacture. The principal controls the manner of manufacture. The principal controls the machinery that the job worker has to use. The principal controls the supply of raw materials, component parts and inputs. The principal says you will have to buy steel only from Tata Steel. The principal says that you will have to buy this machinery which is only Bosch. The principal says your measuring instruments have to be Toyo make. Now are these not controlled conditions? Why should I apply a transaction value to a job working transaction? Why should I not treat the transaction between a principal and a job worker as a related party transaction and therefore subjective to valuation under section 15? Under section 15. As if this is not enough, the principal will supply jigs, fixtures, tools, molds. The principal will say that you will have to do only 10,000 stampings with this jigs, fixtures, tools, molds. The principal will say, I am going to amortize this cost. If this is not controlled, what is controlled? What is controlled? So these are controlled conditions according to me, where price of a transaction is between related parties or distinct persons. So section 25, when it talks of distinct persons, my mind goes back only to a job worker and says, I think these are transactions that we will fight over the next few years. Consideration to be expressed in monetary terms. Simple to say, bhaiya, rupee mein dal do yaar, ho jayega. It will be over. Transactions don't happen like that. Rajat sitting here will invoice in Russian rubles when he manufactures defense parts. Money will get paid in rubles. It will get paid in rubles. Is it controlled condition? Are you controlling the price? Are you hedging foreign exchange? Are you not hedging foreign exchange? Why do you want it in dollar terms? Is this quid pro quo? You know that rubles is going to go up, therefore you have hedged it, therefore you are a subject matter of valuation. You are a subject matter of valuation. Then we come to what is value and what is price. Price is different from value. Different from value. Worldly seafares flag of Nikita Madam, its value is 25 crores. Its price can be 15 crores. Its value is 25, but price can be 15. Price can be 15. Correct? So the distinction between value and price will throw you to a valuation mechanism. It will throw you. We will see some examples of the distinction between value and price. Look at the word consideration. The government has attempted to define what consideration means under 2 subsection 31. They have made a mess, as my chairman said, of the entire definition. We will come to that definition sometime later. What is transaction value? Those of you who practice excise know that transaction value is that the price a recipient is required to pay. Now, look at price in the backdrop of what I am saying. Is price consideration? Is price monetary terms? Is price quid pro quo? Is price expressed in dollar or rubles consideration? All of this we will have to keep at the back of my mind when we look at price. 2 examples of all this. Buy one Louis Vuitton bag. I will give you a jacket along with it, not free. I will give you a jacket. But if I give the jacket free, am I going to be a subject matter of valuation? 1. But if I give the jacket at 1,000 rupees, is it controlled condition? If I give the jacket at market value less 50% discount, is it monetary terms? You will have to apply a mind. You will have to apply a mind. So there is a judgment, there is an opinion that you frame in your mind before you arrive at what a transaction value means. Next. This seemingly simple definition of valuation, although it is not a definition of valuation, this section says value of supply of goods or service or both is transaction value. We looked at what transaction value is, which is the price actually paid or payable for the supply. Now look at a real life situation. Real life situation. Whether price is paid or not payable. Price is paid by the principal to Tata Steels when steel is supplied to a job worker. Job worker does not pay. Job worker does not pay. Principal pays. He has an ability to bargain. He has an ability to bargain credit terms. He has an ability to bargain quality. He has an ability to bargain timely supply. He has an ability to bargain volumes and value. Therefore, we have to be very careful when we apply valuation mechanism in such cases. So it is transaction value, which is the price actually paid or payable. 32-inch Samsung TV sold in Bhayandar, Mumbai. 32-inch Samsung TV sold in Worli Seafares, Mumbai. Both can be different prices. Both can be same model. Both can be on the same day. Both can be at the same time. Both can be of the same person but different showrooms. Now tell me whether you are a fit case for valuation or not. In my view, yes. You don't have that data. Government has that data. Can you call that transaction value? Because the Worli Seafares man will tell you, sir, मेरा 32-inch 100 TV बिकता है सर, बयानदर में 500 TV बिकता है सर, इसीलिए मैं उसको 20,000 में बेचता हूँ, इसको 25,000 में बेचता हूँ. Worli Seafares, Nikita madam can afford, so she can pay more. In Bhayandar, somebody else, Rajat cannot, therefore hits at a lower price. But in both, there is an element of profit. Both are not below cost transactions. Both are arm's length pricing. Both are arm's length pricing. Can you say you will be relegated to valuation or not? The answer is yes. In my view, the answer is yes. The supplier and the recipient of the supply are not related. What is not related? We will spend 2 minutes on that in the subsequent slide. Next. Look at this, how complex this definition is. How complex this definition is. Officers are directors of one another's business. Who is an officer? Is he an officer under the Companies Act 1956 or Companies Act 2013? Is he an officer under the PF Act? Or is he an officer under ESI Act, where every officer is defined under those laws to mean who is that officer of that entity or person? From where should I get hold of that definition? Is an accountant an officer? If the answer is yes, and he writes books for 2 entities, you will fall into this valuation mechanism. You will fall into this valuation mechanism. It's as complex as that. As complex as that. If my officer has to make my life miserable, he will invoke these provisions not now but at a later date. So I have to keep my eyes and ears open when I look at valuation. Legally recognized partners in business, no difficulty. Employer and employee, how complex can it get? They have made it so complex. The relationship between employer and an employee, they say, is a related party transaction. And that is why you have rulings like Columbia Asia coming out. In fact, it is for the same PAN, same employee is maintaining accounts, same employee is rendering advice, same CFO is doing jobs for both the branches. How can there be a valuation mechanism? It cannot be. But the law says transfer tax. Transfer tax. Any person directly owns, indirectly owns, controls or holds more than 25% of the outstanding voting stock. No difficulty in understanding this. One of them directly or indirectly controls the other. Principal controls the job worker. Head office controls the branch. The principal officer manager of a principal warehouse controls the smaller warehouse. Therefore, Schedule 1 Para 2 transactions between 2 distinct persons will get into valuation mechanism. It will get into valuation mechanism. Don't think that OMV under Rule 27 or open market value is going to be the value. If I have to trouble you, I will apply this mechanism of valuation. Next, both are directly or indirectly controlled by a third person. If one supplier is going to control my branch and my head office by way of supplies, he will tell you only 1 ton today, 3 tons tomorrow, 15 tons on Friday evening. Can you say that these are going to be related party transactions because one controls the other? My chairman will come up with different decisions to say, no, this is not control. Control means that stock, control means this price, control means manufacture, control means day-to-day affairs. Just apply your mind. All these can be real life situations. Together they directly or indirectly control a third person. They are members of the same family. I think we will have to go to the General Process Act to figure out who is a family. Husband, lineal ascendant, lineal descendant, lateral, we will have to see. Next. Amount charged by the supplier to the recipient. Simple to understand. Amount incurred by the recipient in relation to such supplier on behalf of the supplier is not included in the price. I think they're coming from McDowell's case, where excise duty was paid by somebody else, not included. Look at today's real life scenario. Packing material can be supplied by someone else. Packing material can be supplied by someone else to the principal manufacturer. Maybe an entity owned or controlled by the manufacturing entity. Owned or controlled, may not be owned or controlled, may not be a related party transaction, but a packing material manufacturer can actually control the principal by not supplying packing material in time. Therefore, can you say, he directly or indirectly controls, and therefore I will throw you into a valuation mechanism for packing material. In fact, it is the other way around. The manufacturer controls the packing material manufacturer for the purpose of supply, but in this case, the tail can wag the head. It is possible. It is possible. Subsidies I will skip. Next. We go to 15.2. Whether the value of goods supplied by customers should be included. Whether the value of goods supplied. We will take 2 examples of this and 2 valuation mechanisms in this and figure out how this 15.2b is going to affect my life. Material transferred to a job worker. Raw material component parts and inputs transferred to a job worker. You will transfer it under Rule 55 delivery challan with an e-way bill. You will think my life is over along with this. Nothing more to be done. No transactions to be recorded. Rajat will sign his 9C certificate also. Then the principal to agency transaction, don't capture, comes under 5O, matter closes. It is not so easy. It is not so easy. I want to figure out whether there is a control mechanism one here. If yes, valuation is required. We were just talking, Rajat and I, at pre-lunch session. Dice fixed, jigsaws, tools, molds. What happens in this case? Two classes of transactions are possible between the principal and the job worker. When you transfer dice, jigs, fixtures, tools, molds, the clarification says that there is no liability to pay tax if the OEM transfers free of cost basis to the job worker. But the clarification continues to say, if it is amortized, you have to reverse input tax credit. How do I reverse? Do I reverse the cost on which I have paid tax? Option 1. Do I apply 4243? If I apply 4243, I will lose higher tax. I will lose higher tax. Correct, Umam? I will lose higher tax. If I don't apply 4243, I will only reverse the correct input tax credit. Now, financial statements will not take care of this position. It won't take care. Therefore, you will get into valuation mechanism once again. Right? Take a case 2. And now I will make reference to a transaction of real estate. Cement steel supplied free of cost. Option 1. Cement steel supplied at 163 rupees per bag and 28,000 irrespective of whether you are going to do the supply. Option 2. Option 3. Cement steel invoiced to the contractor. In return, I get a running bill. Can you say that valuation provisions will not apply to this case? One controls the business of the other. There will be a site supervisor who will be controlling these supplies. There will be a principal in the developer's premises who will be controlling the construction. Can you say that these are not transactions which cannot be relegated to valuation? In my view, yes. Importantly, because in real estate transactions, there will be a restriction of input tax credit to the extent of unsold movable or immovable property. To the extent it is unsold, there will be a restriction. To my view, there will be a taxability of, there will be invocation of valuation. Next, valuation of molds. This is what clarification says we finished. Look at next. How absurd the government can be. I think somebody has lost his balance. Composite supplies are defined under 8 small a of the CGST law. Composite supplies are transactions involving two suppliers, supply of goods or supply of services or both. In the case of a transaction relating to servicing of car, this is the clarification that they have come out with, where the supply and labor are invoiced separately. Supply part and labor part are invoiced separately. The circular says you apply the rate applicable based on HSN in respect of supply of part, and in respect of labor apply the residual cost of 18%. What is the concept of bringing in a composite supply under law? You have given it a complete bypass. Now I want to tell the government, apply the same principle for a packing material manufacturer. There you say in the clarification that it is a supply taxable under chapter 49. So somebody has lost his balance. Either the earlier clarification is wrong, or this is wrong, or both are wrong. Both are definitely not right. Now this is the problem with the government. Now you know what the assessing authority will tell you? He will tell you, circular has gone beyond the provisions of law, therefore it is ultra vires, therefore I will not apply this, therefore on labor charges, which is a composite supply, principal supply is supply of material or goods or auto parts, ancillary supply is supply of labor, pay tax at the rate applicable to the principal supply. Principal supply, which is 28. Sunilji sitting here will not agree. He will take his car for servicing. He will tell you, भैया ये start नहीं हो रहा है, इसको कुछ करो. He will tell you, sir, एक spark plug change करना. Has he taken his car for application of labor or obtaining a part? The intent behind these transactions become important to understand since composite supply. Therefore, is it supply of labor first and part later, or supply of part first and subsequently labor in all service contracts? This is going to be a moot question which we are going to fight for the next 10 years. In AMC, is it supply of part or supply of labor? You can have an annual maintenance contract without change of a single part for 1 year. So is it labor contract liable to tax at 18% or a composite supply of servicing of a computer peripheral, therefore you will be a subject matter of levy at the rate of 12% under service contracts? Think for yourself, decide whether it is a composite supply or a transaction relating to service. Next. The moment I see this word discount, I run into typhoid, flu, malaria, all of this. I simply can't understand what is happening in this market. You have price discount, rate discount, volume discount, value discount, quantity discount, seasonal discount, off-seasonal discount, off-take discount, dealer-based discount, area-based discount, person-based discount, payment-based discount, all of it. As if this is not enough, we now have one latest devil in the market. He says in respect of all of this, there is something called financial credit note. In my life, I have not heard of it. It's the first time I am hearing it. I am hearing it. Under indirect tax laws. I don't know about company law and income tax. Now what is this financial credit note? Is it outside books, within books, outside GST law but within financial statements, in books but not in financial statements, in notes but not in 3B? What is this you are trying to do? What is this you are trying to do? A credit note is a credit note, call it by any devil. It doesn't matter. It doesn't matter. So long as it relates to supply under section 31, it has to have a tax component in my view. In my view. If it doesn't have a tax component and if it is post-September, I will issue notice under 74, not 73. Because 74 will lead to prosecution, 73 will lead to penalty. So under 74, I will invoke 129 to say you have aided and abetted this. This is how the notice will tell you. Show cause why I should not prosecute you. And those fellows have no mercy when they give notice. Their first notice will be prosecution notice. And this is how it is going to come. And this is how the market is behaving. What is wrong? Show the credit, avail it, reverse it. Matter is over. Why are we calling it financial credit note? Is it incentive disguised as discount is something which I will want to look at in respect of these transactions. Is it an incentive which you are passing on as financial credit note? To my mind, yes. To my mind, yes. Because these are transactions which are post-financial year. Correct? Post-financial year. You want to see whether Kabraji has sold 5,000 cars or not. Then you will decide. सर ये हैदराबाद में बैठा है इसीलिए 500 बेच है, अगर ये अमरावती में बैठा तो 3000 ही बेच सकता है, therefore cut this man. Correct? You have to be very careful in respect of valuation provisions. Next. This Maharashtra and Karnataka are leaders in litigation. Who overtakes the other we don't know. But both of them are right there on top. Both of them are right there on top. This man, what he did, he said discount 100%. 100% discount. Court said, have you gone out of your mind? Discount I can understand, which is not there. But you are giving 100% discount here, availing input tax credit. Advance ruling authority and the court continuously said, discount is a matter between the supplier and the recipient and both of them must be aware on the date the transaction commences. Period. Period. Anything after that is only credit note and not discount. It is a rise or fall in price but not a discount. It can be a price difference but it is not a discount. It is not a discount. I have come across people who have disguised warranty supplies as 100% discount. 100% discount. some of the largest companies in Mumbai, they say 20,000 rupees for motor replaced, 100% discount. Is the man out of his head or what to give 100% discount? So the officer will see something more to it than what meets the eye. Usually ठीक है भैया उसको 100% बुझाए तो 80% दे दो बाद में देखेंगे. And there are valuation systems which are open for this. We will have to be absolutely careful. Never ever disguise warranty as discount. We are not going to survive that. Next. We have finished. Next. Some of the finest principles of valuation come through application of mind and not by application of law. Not by application of law. All court decisions, all advanced rulings, bear in mind, it cements or uncements your decision. First you take the decision, then start applying similar case laws. You will arrive at a better decision. Don't say it is a covered matter, it is covered here, it is covered there, nothing will be covered, everything will be uncovered later. So, first make your decision. Look at how Columbia Asia has come. It is the manner in which you ask your question. If somebody says, sir, can I drink while I am praying? Father will say, get out. You ask that same question differently. Correct? When I am drinking, can I pray? That is the best way to do, otherwise you will never learn. So how you ask your question matters. How you ask your question matters. This is where we went wrong. The question here was, I am supplying labor in the form of employees to do accounting and HR functions of my hospital situated in other states. They said cross-charge. They said you cross-charge. In fact, if the question were to be other way around, that the same employee does accounting for a hospital elsewhere and he is an employee of the company, they would have said the relationship is an employer and employee, therefore there is no liability to tax. Now look at the pain points that it is going to carry. If Rajat is having an office in Bangalore and the services relating to HR accounting is rendered in Mumbai, he has to know cross-charge. Or have the courage of conviction to say, this Columbia Asia is applicable only to this man in that, for that GST number, proceed. But every officer is going to apply the ratio of this decision and make your life miserable subsequently. Actually, this is a very small element. You take states like Mumbai and Karnataka. Some of the largest valuation issues are going to come out of this principle. I will give you 4 or 5 examples. All your BPOs and KPOs, either in Mumbai or in Bangalore, they have 5 or 6 services where these valuation rules will kick in. Take HR function, for example. HR function. Recruitment happens in Bangalore. Employee is sent to Mumbai. Correct? All, not just induction, even commission, everything will go from there only. Right? Employee is sent to Mumbai. Reverse is also. HR software residing on the server in Mumbai, accessed from Bangalore. Right? Take case 3. Technical services provided by Mumbai to Bangalore and vice versa. You never do a valuation for this. You don't do. But now you have to do. Now you will have to do. Manpower support services. Right? People keep moving up and down. Now you will have to find a way to do a valuation for this. I will say $10 per hour. Maharashtra will say, what nonsense, tax has to come here, $15 per hour. We have to fight in both the states. Importantly, you forget this, we can handle this because it is one versus the other distinct person. Somewhere one tax is residing. Take a case where the principal is, let's say, in UK. The office is in Mumbai. You access software, now they say through cloud, through that, through this, wherever, through C, whatever cloud or C, you access software not residing in India. Should I not say it is import of services, therefore pay GST? If yes, what value? Yes is understood among what value? Should I go on manpower? Should I go on man days? Should I go on internet cost? Should I go on cost of software? Should I go on the number of days you have access? Should I go on number of persons who has access? Should I go on turnovers which are in each country and say this much is the value that you have accessed? It's never ending. Now I will tell you to pay IGST. 1. 2. Your technical support coming in from outside India. The software engineers coming from Germany here are not my uncles and aunts. He is not coming here to ask you whether you had breakfast in Mumbai. He is coming here to deliver a job. Should I not say there is import of service? Should I not say there is import of service? What you do, you book his travel ticket, you book his hotel accommodation, say everything is over. Nothing. 2 times I will take you to valuation. 3rd time you will be alright. Next. OMV. Open market value. This is where I thought, let's look at what is like kind, like quality when you come to the principles of valuation between 27 to 31. It says open market value, like kind, like quality. Look at the second part of the definition here. It says quality, quantity, characteristic, functional components, material, reputation of the goods. Who can say whether Samsung and I6, I plus 1 plus 6 have the same reputation? Can you say? You are nobody to say. So if you are looking at valuation here, you don't have the data, but the government has the data. Just like transfer pricing. Transfer pricing is open. You can go, you can work, you can do something. Here your eyes are blocked, you are closed, you don't have that data. Government has that data. Can you say LG 32-inch and Samsung 32-inch TV are the same because they use the same color or picture tubes or the same ICs? No. LG will say my brand is superior, Samsung will say my brand is superior, both will say I am inferior to bring down the valuation. Anything can happen. Anything can happen. Like kind, like quality. When the government applies and you try to find it, be careful. You can get relegated to the residual clause, which is best judgment. So when you look at an open market valuation, in respect of goods, at least you have one comparison, something, Samsung, Onida, LG, something you can compare with something. Can you look at service? Can I say Vikramji's service, Nikita madam's service, simply because both of them are advocates, both are same? Simply because both of them have the office in World Trade Center in Mumbai? Simply because both of them are in Ford? No way. One will be 5 lakhs, one will be 2 lakhs, one will be 14 lakhs. How do you compare valuation of service? This is going to be one of the largest challenges. This is what my chairman was saying, that the principles of valuation in some form have been copied without application of mind. We will have to be extremely careful when we now proceed to look at the principles of valuation. Next. Where consideration is not wholly money. Consideration is not wholly money. Nikita madam will not keep quiet. What she will do, she will want to buy a 120-inch TV for her house. She will take her old 42-inch TV and give it back. 2 ways of doing that. If there is an advertisement or if there is a person who says old TV less 10,000, option 1. Old TV, I will check value and tell you what price, option 2. No buyback, return old TV, you get a new TV at 1,55,000, option 3. Both cases will lead you to OMV. It will lead you to OMV. All your cases will lead to open market value. Look at the latter part of that first yellow bullet. Open market value of such supply where recipient is eligible for full ITC. Please don't miss the rule. Please don't miss the rule. The rule says where recipient is eligible for full ITC, full input tax credit. Para 2, schedule 1 says transactions between distinct persons are treated as a supply under schedule 1. Schedule 1. Rule 37 says, in respect of transactions between distinct persons, there is no requirement to fulfill the clause of section 16.2, which is payment within 180 days. No need. Therefore, what you do, there are people who are valuing stock transfer at cost. There are people who just put one approximate value in delivery challenge and e-way bill, move goods. There is a third set of people who apply their mind and say cost plus 10%. There is a fourth set of fellow who moves raw materials, component parts, intermediate, sub-assemblies, etc. at cost of manufacture of goods or cost of goods sold. They arrive at a price and sell. All these are going to be subject matter of valuation. Consider this case where the recipient is not entitled to full ITC. I'll give you an example of Unilever. Unilever transfers colors, chemicals, pigments, essences and flavors from its Mumbai factory to its factory located in Bangalore for manufacture of bread. While these chemicals are taxable, output is exempt. You think Mumbai is my father and he will keep quoting take away kuch bhi karo? He wants to retain tax. He will go after your valuation. And these are not small numbers we are talking. These are transactions to the extent of 100 crores a month where transfers happen. He is not my uncle. He is going to relegate you to valuation. Take a case 2 where goods are moved to R&D center. R&D center where input is blocked. Where input is blocked, you will be subject to valuation from the output branch. You will be subject to valuation when you move goods to an output batch. 2. Total of money and money equivalent to consideration in terms of money. Money equivalent in terms of consideration. Here is what quid pro quo comes in. You send an engineer, Indian engineer to Germany for 15 days. A German engineer comes to India for 15 days. I will value both. I will value both. In money or money equivalent. I will value both. You cannot offset one versus the other. Value of like kind and like quality. You can't have a comparison at all. You need Vikram to fight our case for the next 10 years. Because both Samsung and Onida will be opened for valuation. You will need his help to fight for the next 10 years. Right from reputation to quality to the number to manufacturing facility, you will have to fight everything for valuation. 110% cost of production. Don't say you can move goods on stock transfer cost plus 10%. No! Please apply your mind. Recipient branch and then look at it. Reasonable means consistent with the principles and general provisions of section 15. This is where I have a problem. Asking officer will give me notice for 2 crores. Then I have to go, stand before him and plead. This is where difficulty arises. Next. Goods received through agents. Rule 28. Rule 29. It says 110% of cost of production when it moves. It says 110% cost of goods if these are traded. Otherwise it will be reasonable and with consistent methods at the mercy of the assessing officer. Next. I'll just take on that example. It's easy. Next. Rule 30 and Rule 31. Wherever you are not able to figure out open market value, cost plus 10%, like kind, like quality, this man will come into operation. Which means 1 in the green is the notice that you will get. Reasonable means consistent with the principles. Assessing officer will give you notice for 40,000 per TV. Go on fighting later. We will see later. Next. I'll just deal with one issue here of actionable claim. I will require my chairman to comment on this one issue when he does the closing remarks. Actionable claim is with reference to section 3 of the Transfer of Property Act. So it is a referential legislation under GST law. Now actionable claim other than lottery, betting and gambling, are goods. Actionable claim is covered by Schedule 3, Para 6. It says actionable claim other than lottery, betting and gambling are neither goods nor services. In real life situation, consider this case where Paytm gives you 500 points or 500 rupees. Consider this case where you go to a Lakme salon, he gives you a coupon for 500 rupees. Consider this case where Lakme says, next time you come to my salon, you are 30% off. Consider this case where you go to a bookstall and he says, I will give you a coupon for 20 rupees or 20%. Consider this case of pizza where he says if you order today, tomorrow is free. Are these actually actionable claims or are these actually discounts or these actually points? Now there are two judgments which come to my mind: Sunrise Associates and Yasha Overseas. In the case of Yasha Overseas, the Honorable Supreme Court has not dealt with this points related matter. They have said, because time of supply, place of supply and valuation mechanism will come in, the Honorable Supreme Court has just left that open. That is my difficulty. That is my difficulty. Because it now stands open to scrutiny. Now stands open to scrutiny. If they had dealt with it there, it would have been closed. Either it is goods, or it is service, or it is point value, or whether or not Nikita madam goes to Lakme Salon later, avails that discount, we will deal with it. But here, because it is left open, whether it is an actionable claim, or supply of service, or supply of goods, classification becomes absolutely critical. Next. Consideration versus sole consideration. What is consideration? What is sole consideration? Is sole consideration transaction value or consideration transaction value is what we will have to figure out. Consideration is defined under 2 subsection 31, which says in respect of, in response to, in inducement of. If Nikita madam goes to Food World in Mumbai, madam you go to Food World in Mumbai, he will tell you bread with honey, take it or leave it. He will tell you bread with honey, take it or leave it. It is there, it is working even now. He will tell you packet of 3, the middle one will be only 1 week left. Shelf life will be over. The last 2 will have 2 months. That's how it is packed. That's how it is packed. This is the truth. This is how market functions. Now, in all of these cases, whether it is in response to or it is an inducement, he will tell you, you buy Surf Excel 3 kg, I will give you bucket for 50 rupees. So he is inducing you. So is it consideration or is it sole consideration? Valuation mechanisms will differ. Next. We have had this example. Move to the next. Absence of consideration. What is absence of consideration? Absence of consideration is not treated as a supply under the goods and service tax law. I have just taken an example here where company issues diaries free of cost for New Year. There is absence of consideration. Input tax will get restricted. Input tax will get restricted. Simple case, no difficult. But take the second one. I've just complicated this a little more. I have said, let us say you have Olympic sports in Mumbai. Lifetime bat free for Virat Kohli. Lifetime bat. I will give you bat, ball, whatever. Pad, lifetime. Mumbai it's happening. Right? Lifetime free. In pursuance to what? Services rendered by Virat Kohli as a brand ambassador for Olympic sports. Who is rendering service to whom? Who is supplying goods to the other? The test is whether there are 2 transactions or whether there is one. One being a supply from the sports utility which gives free to Olympic sport. Therefore, you have to restrict input tax or subject it to valuation. And the brand value of Virat Kohli, when he appears on a magazine, when he appears on a television, when he appears on print media, I will take the highest value and apply as transaction value. Highest value as transaction value. Think through this transaction. And these are very large transactions that I am talking of. Take the next case. Next case. The case of an exchange of old TV versus new for a reduced price. Reduced price. You take an old TV, he will tell you 3,000. You take a TV which is working, he will tell you 5,000. Not working, 3,000. TV with remote, 5,000. TV with no remote, 2,000. These are real life. It happens in the market. Please go to the market. You will see. Every case is a valuation case. Next. Apadi. Discounts, bad debts, consideration paid by third party. Discounts, bad debts, consideration paid by third party. Discounts we have discussed enough. I am not going to talk about it. Is bad debt really a bad debt? Is something we will have to see. Those of you who practice income tax, 3617 is the test that you will have to apply. Not that that is an infallible test, but you can use that as guideline to figure out whether this is bad debt. Otherwise, reverse input. Reverse input. That's it. As simple as that. When you read this, you will know how you will reverse input. Paucity of time, I can't take you through an example. Consideration paid by third party. Consideration paid by third party. Consideration includes payment in monetary or non-monetary terms. Rajat will tell his company, boss, isko 1 lakh fees. Filing monthly return for 3 months I will do free. I will subject both to valuation. Next quarter you will be alright. Next quarter you will be alright. Because I can find this on your email. I can find this on your email. This is the simplest example that I have given you. Simplest example. Sir, GST implementation को 5 lakh दे दीजिए sir, 1 month, 1 year free. Like kind, like quality, I will find the services from your books and subject you to tax. No question of going after recipient of service. Next. I've tried to figure out discounts, bad debts, consideration by third party. Absolutely straightforward example. You can read this later. I'll take you through some complex issues. Next, as we move on, these are some of the complex issues of valuation. Purpose of contribution to consideration by third party versus sponsorship. Right? When you go from Delhi to Gurgaon, please look at those flyovers or bridges that are there. You will find Indigo, you will find SpiceJet, you will find Ericsson. The landing will be in Ericsson compound. The metro stops at Ericsson. Not for nothing, Ericsson has given 100 crores to Delhi Metro. The test is to find out whether there is a sponsorship or an advertisement or a donation or a service You will have to fix it. You will have to fix it. Who is the service provider? Who is the recipient? Whether it is a sponsorship or whether it is an advertisement, whether it is a forward charge or whether it is a reverse charge. It's a very complex and tricky situation. Take this one example where Nikita madam, what she will do, she will tell, please take all these children here to an IT park and show them how computer software works, and she will pay 50,000 to school. School will give refreshment, school will give bus, school will take children, they will do everything. What service you are receiving? Nothing you are receiving. What service school is receiving? School is receiving services from the IT company to allow it inside, allow the children inside. Children receive the actual service of going in. Who is taxable for this 50,000? Because IT company in the end receives this 50,000 or school receives this 50,000. One of the two. If IT company charges, he is receiving money. Is it sponsorship? Is it advertisement? Is it ticket cost? Is it entry fee? What is it? We will have Oppo or Vivo or whoever it is. Man pays. Is this a sponsorship transaction? Is this an advertisement transaction? Right? Look at the second part of it. Service provider is BCCI in the form of your IPL in Nankani stadium. Correct? Service recipient is people like me, my chairman, all of us sitting on the desk because we come and sit there for 5 hours doing nothing at home. So we sit here. Right? Who is the service provider? Who is the service recipient? Is it sponsorship? Is it forward charge? Is it reverse charge? Is it third party payment? Public is also paying. BCCI is also paying. Who is paying whom? Whether there are two services or one service, in my view, two. Both are taxable, credit available. Next. Valuation, cost method, we'll skip this, we'll move to the next. Chaiman sir, I have 7 minutes? Yes, sir. I have 7 minutes. Next. Simple valuation mechanism in terms of exchange. Nothing here. I think it's very simple valuation of services. Next. Specific valuation option to the supplier. In insurance business, very simple, forward charge, no difficulty. Next. Pure agency transactions. These are some of the most complex transactions that we come across. If I were to take a simple advocate or audit services that we render, or tax services that we render in our offices, it has now become a practice to receive 1 lakh from the client. You pay your tribunal fee, filing fee for the tribunal, ROC, whatever yours required. You also pay the counsel fee or consulting fee, whoever you have engaged, etc., etc. Balance 5,000 you don't return to the client. You will give him voucher for 95,000. Right? Balance Python, there is no talk. Pure agency transactions, you will have to fulfill 4 conditions. It says, first there must be a contractual obligation for rendering of a service. First you must have that. Then the money that you receive, the recipient of service must be aware that you are paying a filing fee. He must be aware that you are also going to pay Vikramji for the purpose of his consulting that you take in between. Then you must also provide him with vouchers and the balance you have to return. If you don't, the entire 1 lakh becomes taxable. Credit available. Credit available. Next. Assessable value under central excise services. It is MRP versus transaction value. No difficulty, excise had its own litigation valuation issues. But next one is relevant. Next. It is central excise valuation versus GST valuation. Right? Under central excise, the levy was at the point of manufacture, but the law gave you time to pay tax on removal. Levy on manufacture, payment on removal. Now GST has given a bypass to all that. It has 4 classes: receipt of advance, booking of entry, removal of goods, acknowledgement by supply, appropriation, matter over, pay tax. There is a subtle distinction between GST and excise. Next. Rajat will not agree with me because he has fought with me at lunchtime, and therefore I have taken this example. Now look at this. I would like my chairman to comment on this also, whether this is a workable litigation or not a workable litigation. I'll be a little fast. You have to catch up. You'll have to catch up. Import of goods, customs duty payable in terms of your section 4, section 5 of your customs law. No difficulty. Valuation happens there. He adds some 1%, 2%, whatever that customs guy adds, you pay your tax, you are done with it. Import is on dollar terms. Payment is on credit terms. There is an exchange rate fluctuation, gain or fall. Clause M of table 5 of 9C of the goods and service tax form says, adjustments to foreign exchange fluctuations reflect here. And if I am an importer of goods or service, this table 5 coupled with 6, 8, 10, read with 11 actually captures tax. I want to figure out whether I can litigate this because my taxable event for the purpose of levy of IGST is import. The day I import, that is the valuation, RBI or GST notified rate. Whichever is the rate, I am going to pay my IGST. But this form seeks to capture tax again 1 year later. Because today dollar is 72. When I imported 3 months before it was 66. Now if I have to pay tax on the balance 6 rupees, credit also gone because September is over. Where will I run? Now I am saying the intent of the government is to capture tax. Rajat says that the government is in error. They don't know. They have just put one column. That man is not my uncle. He wants tax. That is why he has put it there. Right? Next. Valuation of free supplies. Mumbai is the culprit. Bangalore has followed Mumbai. I unhesitatingly say this. No offense, Mike, just an example. No offense, nothing. Take a case of Cisco. Cisco has its largest godown in Andheri East. Cisco manages close to 4,000 crore inventory from its Andheri godown. Cisco supplies 4,000 crore of inventory every month across India. All 3 modes of transport: air, water, road. Because they are 6 Sigma. These are warranty contracts. The original contract is between the OEM, original equipment manufacturer, and the end consumer. Cisco maintains stock here. Customer enters an email saying, my computer is not working or my router is not working. The system traces. It says this part is available in Andheri East Godown. Pick it up, deliver it to Guwahati. Goods move. The person who is moving the goods, who is DHL, does not know whether it is AMC, warranty, free issue, free supply, short supply or SL. Man doesn't know. He doesn't know. He doesn't know. What Cisco does? It says, I am importing these goods, I am paying IGST on this value. I pay IGST on clearing goods. I pay IGST. This credit is accumulating in Cisco's hands. On removal, it is utilizing this tax because it moves from Mumbai to Guwahati by way of IGST. I will fix you in valuation. I don't want tax on the part value. I want tax on the contract value. I want tax on the contract value. One notice, next year you will be all right in Mumbai. Right? Be careful. Next. Chaiman sir, one more minute, one more concept I will close. I promise you I will close. ITC availed over free supplies, I will not waste time. Next, Swiggy is over. Coupons, I think we'll skip this. Nikita madam's example has already come. Next, Amazon. Take valuation of free supplies. All these e-commerce companies, they don't keep quiet. Amazon says, use my Prime, Amazon Prime, 1 month free. You can download. Are you subject to valuation? There is a recipient, correct? Umang, you agree with me? But who will pay tax? That is my question. Who will pay tax? Will Amazon pay tax? Will Vikram ji pay tax because he is downloading this on his mobile? He is downloading this on mobile. 1 month he is using it free because I can track down that mobile. Be careful. How much time he is logged in, how much time he has been on the net, I can track it down. What is the valuation? What is the valuation? Who will pay tax? Should I register as an OIDR? Until 11, 12, 13. What value? What value? Vikram ji is in Mumbai. Your man is in Cochin. Your fourth fellow is somewhere else. Can you say Mumbai is 100 rupees, Guwahati is 40 rupees, Cochin is 120 rupees? Because I know the number of downloads. Think through. In my view, tax is payable. Thank you very much, ladies and gentlemen. Thanks a lot for giving me this time. I had 2 or 3 other concepts. I thought I would stick to my time. Thank you so much. I might have, yes, give me 1 minute more. Give me 1 minute more. I might have taken up some of the issues which could hurt. But these are issues that are going to come up 3 years from now. These are issues which will be a subject matter of valuation. It is not that the government is aware of it. The government is aware of it. There are intelligent people in the government. It is time we pay attention to these transactions. Thank you so much, ladies and gentlemen. Thank you, ARTP. Thank you, Tax Practitioners Association, Tax Friends Mumbai. Thanks a lot, Chairman sir, for giving me that little extra. Thank you so much.
Thank you, Mr. Ramani. You didn't have to give that disclaimer at the end. You know, it was a very thought-provoking, incisive presentation made by you. We know that this is a new law, a learning curve. It's like the 7 blind men feeling the elephant. Each one has his own description of what the elephant means and looks like. Having said, yes, there will be teething problems. And it's like, you know, trying to find a solution and landing with more problems. It reminds you of a joke or an anecdote where a couple goes to the family court and seeks divorce. And the judge says, I can't grant you prayer B because prayer B says you want to divide the children and you have 3 children. How are you going to divide them? So both husband and wife look at each other and say, okay, judge, we'll come back next year. We'll have a 4th kid and come back. God bless them, they got twins. So sometimes you go to solve a problem and end up with more problems. That's what it is. Life is such. Yes, I know that, first of all, thank you very much to all those who volunteered for their names to be used. Nitika Ben, Manager, myself. That was voluntarily supplied.
He was sleeping, so he was sleeping on me.
Absolutely. No, that as I mentioned to you, that you don't, the perfect speaker post-lunch, you didn't need someone to wake you up, he shook you up. Okay? So that's great. And I can technically walk out just now because this is a complete breach of my contract with the organizers. Vijay promised me that the chairman will not be asked any questions. And here I am in the hot seat. Imagine this is the other way around, that I'm in the hot seat. Nonetheless, I think if I duck, I will be doing disservice to the excellent presentation that was made. So in my own humble way, I will attempt to answer the 3 or 4 points of importance which have been flagged by the learned speaker. So the first one, on controlled conditions. He gave a number of examples of how a transaction can be controlled between the two parties. To my mind, with great respect, the controlled conditions definition is rather simple. In every contract, you are going to have the checks and balances. You're going to have rights and obligations of both sides. But that doesn't mean that the transaction is a controlled condition transaction. Merely because you have specifications, merely because you have control over the quality of material that you're going to use, you're going to produce, does not make the transaction a controlled transaction. That would be stretching it to nearly its breaking point. The simplest definition of control conditions is that is it governed by the free forces of market or not? If it is not controlled, then it must be governed by the free forces of market, which is the free market theory. And if it is not governed by the free forces of market, then it's a controlled condition. So a good example which the speaker himself gave later in the course of his discourse was of a tie-up of goods. So you go to a supermarket and you're forced to buy one toothbrush and a toothpaste, even though you don't need the toothpaste. You have just gone there to buy a toothbrush. You are tempted because of the manner in which it is packaged and manner in which it is presented in the price of discounts that you're offered. But that tie-up sale is not in control condition because you are forced to buy something. Take another example of, let's say, a kind of a royalty payment. So that you say, on one hand, you will manufacture these goods for me, there will be a buyback, but for the use of the brand name, there will be a royalty which you will return me on this product. So things like that would make it where there are no free forces of market which govern the transaction would be covered or captured by the definition of control conditions. The word control has not been defined in the valuation rules or the definition of related party. But what it says is that you are controlling the other. When it says the other means the person, the entity. So are you controlling the person or are you controlling the transaction? There's a difference between controlling the transaction and controlling the other party to the contract. When you say that you're controlling the transaction, that is a separate story because that is where even in an arm's length situation, and sometimes you're tempted to go back in history. Remember, old is gold, and some of those principles are everlasting, evergreen. So even if you go back to, let's say, a case like Bombay Tires International in 1983, the Supreme Court, when it was migrating from the wholesale cash price, which was the Volta's judgment of 1973, and then you moved on to Bombay Tires International in 1983, they put it very simply, and they said in Para 49, if I'm not mistaken, that anything which goes to enrich the value of the product up to the point of its sale will form part of the value. So they dealt with situations of warranty, they dealt with situations of advertisement, they dealt with marketing, they dealt with storage in depots, they dealt with the entire gamut of those expenses which come technically after the goods left the factory, which was a taxable event. The manufacturing part was a taxable event. And yet, the Supreme Court took the concept of valuation beyond the shores of the taxable event to say that taxable event is just on the chargeability. But you have a machinery provision which stands independently from the taxable event. The machinery provision being the manner in which you compute the value. And the manner in which you compute the value would take into its sweep not only those elements which go into the manufacturing part directly, but also indirectly contribute to the value of the product in the market. And I think that concept today stands in good shape even in the GST regime. So although I said earlier that you may have to unlearn a lot of these principles, but some of these principles are, as I said, golden rules, and then you remember that how everlasting they are. Take another case which you said very rightly of job worker. It's not a very simple, complex, it's not a very simple situation, it's a complex situation. Yet, reflect back and look at the Supreme Court judgment in Ujagar Principles. It was dealing with a case of a job worker. It was dealing with a case where there was no sale involved, much before the concept of supply was introduced, which today covers a non-sale situation. Supply is more than just a sale. And they were also then dealing with a situation of supply of raw materials, supply of inputs, labor being used by the job worker, and they were grappling with the situation as to what should be the value in the hands of the job worker. And there were two extreme views which were being propounded. One extreme view was take only the job charges, that's it. And that should be your transaction value on which the excise duty should be paid. The other end of the spectrum was that no, take the price at which the principal who is supplying you the raw material and the formula for manufacture and probably molds and some capital goods, you take his selling price in the market. The Supreme Court said no, forget both the extremes. Treat this as a deemed sale. And if I remember correctly, they have used the word as if sold by the job worker, as if. So they introduced a deeming fiction by a judge-made law. Of course, in India, we have a peculiar situation where everything is blessed by 141, Article 141. So even judges can make laws contrary to what the common law principles in England are. The courts just don't make laws in England. You can't do that. But in India, because of Article 141, which has no equivalent in any other part of the world, you can have a judge-made law. So Ujagar principle was one such case in point. And in Ujagar prince, they said that you would treat this as a transaction of a deemed sale, and then you evaluate it in the hands of a job worker as if he was a seller, and apply the same principles of Bombay Tire, which is all those elements of cost you add, which go to enrich the value of the product in the market, and tax that as if that was the manufacturing price. Because when Voltas was decided in 1973, Justice A.K. Roy said, since it's a tax on manufacture, you will levy excise duty only on the manufacturing cost. So you see the evolution of law. You see how it has evolved over a period of time. And today, to some extent, that is what is sought to be captured in Section 15. I know that government has a lot to do, but yet it's a mammoth task. Remember that India is a unique sui generis country. It's a sui generis example, because nowhere across the world, barring maybe Canada, you will find that a federal government, which has got state and the constitutional balance of federal government to the central government to be maintained across the board, does come up with a tax like this. So it's not easy to move the elephant in the Indian context, as they say. So you will have to apply some of these old golden principles. Yes, he asked me about actionable claim. Actionable claim is actually a concept in the Transfer of Property Act, because that is not something you can transfer an actionable claim. It's actually called assignment of an actionable claim. But what is actionable claim simply put? It means a debt. It's plain and simple debt. So you have book debts. Can you transfer the book debts to somebody else? Yes, it does happen in today's world. If those who are familiar with the insolvency and banking company laws, you know how, and a CA will know that all the more, that you can actually transfer to ARC and other such entities book debts. So a transfer or assignment of book debts is an actionable claim. Now that is something which is obviously not a supply in any sense of the term. Of course, there are exceptions. I don't have to go into that. A debt which is secured by mortgage or hypothecation is not an actionable claim. Actionable claim also covers a beneficial interest in a movable property. So if I today, and I must return the compliments to my colleague here, if I go to Chroma and say I want to book this TV and it is a gift to my friend please send it directly to Mr. Venkataramani, even if it is means in Bangalore. And I book it in his name and I pay for it. I create a beneficial interest in the television in his name, and that becomes an actionable claim. But is there a supply between him and me? The answer is no. Because you're creating a beneficial interest and nothing more. Of course, it takes you in a different realm of law, because there are laws in England which talk about third party beneficial interest act. So a third party to the contract can, a third party can sue you even though he is not a party to the contract. If he is a beneficiary under a contract, he can also sue you under the contract. So those cases where, say, for example, you have a performance guarantee, you say that, or you have some kind of a sponsorship program that I will sponsor this cricket match provided 10% of the sale proceeds go to this charity or for this purpose, then you are creating a beneficial interest in favor of a non-party to the contract. So that is something which would be all covered by an actionable claim, and that would not be treated as a supply. Coming to the last example, I hope the last example, if I'm not wrong, is of the high C sale and the GST, on the rate of exchange. I think again much depends on the manner in which the contract is structured. Wise, prudent commercial men will hedge the dollar. And they know that even if they have to pay 1 year down the line, they're getting a credit from the foreign party, they hedge the dollar with the bank. So normally it should not have a problem. But in those rare cases where you are going to have a situation of a Sunday being longer than a Monday, that is, you pay more amounts to the foreign party because the dollar has risen and the rupee has fallen, and you recover less in the form of an IC sale from the Indian buyer in Indian component in rupee, I suspect that that is part of a business risk. Too bad is the answer that the taxman will give you. Because then you get exposed to the amount that you have actually paid. And that's the risk that you bear. I mean, you live by the sword, you die by the sword. Simple. And I think tax is not meant to factor every nuance of a commercial transaction. A tax must operate as simply as it can, leaving the complexities of the transactions to the businessman, and they have to then go back to the drawing board and work out the rupee naya and paisa. He can't come crying back to say that the law is defective. Sorry, the law is not defective. It is your transaction structuring which requires you to now do brainstorming. You should have gone to the doctor, you should have gone to Venkataramani before you enter into the transaction. Sorry, I'm just learning, I'm a quick learner. So that's what it is. And many a times, we are dumbfounded by the mystery of the situation. It's the fear of the unknown. It's like, you entered office in the morning and your wife calls you up and says, what's the date today? And you say, 7th October, and then she keeps the phone down, and then you wonder, what? Did I forget her birthday? Is this today our anniversary? And then you start scratching your head. Is my mother-in-law coming for dinner today? What the hell? Why did she ask me what's the date today? Until you reach home and she says, oh, this calendar page was torn, therefore I forgot the date. So sometimes, you miss the wood for the trees. It's a simple situation, then you imagine them to be more complex. And that is why the fear of the unknown is there. So I think we have to face this law head on. We have to learn to read it simply. And we don't have to tie ourselves down with the various problems that we see. Yes, love thy neighbor, but don't borrow his problems. And with that, I think, we have had an excellent afternoon session. Thank you so much. But I would love to hear you for a longer time. And I promise to do that again. Thank you.
Thanks for the wonderful insight. At this juncture, I would love to request Shri Adam Tekchandani to felicitate our chairman, sir, with a token of appreciation. Please present him a memento. Thank you so much, sir, for your time. Kushlani to do the honors. Thank you so much. And now is the time for the draw of the lucky winner. I request Shri Krunal Davda to request our chairman sir to pick up one number and find out the lucky winner of this session.
Yeah, the lucky number is 295. 295. Okay. I'm told that if this is a missed call, then I have to pick up one more. So last chance before I go to the next number. You will lose, you will forfeit your right. 295? Nobody? Okay, excellent.
If nobody is the right, then is mine.
Yes, it is subject to verification, audit, post-audit, pre-audit. Okay, not very far from 295 is 308. 308. Oh my God, there's so many missing. We can't give it in absentia. What is it? Is someone missing a ticket to Singapore or something? Okay, I seem to be in the same range. So this time it is 266. I think I'll hand it over to
picking up yet another.
070.
Those jumps what is it? Venkataramani sir, those 00 jumps what is it?
Congratulations, sir. I request to propose vote of thanks. I request Shri Krunal Davda to do the honors.
It's really my privilege to give the vote of thanks to such a learned and expert speaker and senior advocate of the chairman of the session for today. As the chairman sir rightly said, he's a stunner. As a student of law, for many of us, this 1.5 hour lecture would be equivalent to 1 or 2 months of learning and training from him. I was watching from the dais, and sir, I can be 100% sure that no one even blinked an eye during your lecture. From the definition of certain terms to the sections to the rules, the ARs, and the various examples he took us through, he explained in such detail that it will be a long task for us in practicing this good and simple tax, as it is said. Sir, actually, he discussed and examined so many issues and provided inputs and problems with respect to such transactions, which would give us a food for thought for all this. I would also like to thank the Honorable Chairman of the session, Shri Vikram Nankani, sir, Senior Advocate, for chairing the session and sparing his time from his extremely busy schedule. Sir's experts' comment and remarks and insights on today's valuation session would also be invaluable for all of us. He also shared with us certain examples which provided more clarity on the topic and the subject for the today. On behalf of Tax Practitioners Association and all the joint associations, I would really like to thank both of them for coming here. And we all would be failing in our duty if we don't applaud them with a huge round.
Thank you so much. Before we break for tea, one important announcement. Those who have not collected their study material are requested to collect the same in the tea break, as the counter will be closed after the tea break, and the NEC meeting will be held at 4 p.m. at Accord.